Okay. Now, the next thing that we receive quite a fair bit is actually on rental income, actually. Yeah. Surprisingly, rental income is commonly asked questions. Okay, determining rental income. Now, ladies and gentlemen, generally we have seen these 4 or 5 questions that came to us. So I will say we summarize it to these 4 questions. Some are duplicating, similar in nature. So number 1, question: can rental income received by one person, one of the owner of a joint property, be declared by only that person? That's the first question. We thought, okay, this is an interesting question for us to just pass on some knowledge over. Number 2 is, how do I declare my property rental income when a property is under loan? Property is still under loan. Okay. Number 3, can I claim agency fee, management fee, renovations against my property rental? Number 4, what are the correct amount to declare, and how can I calculate my personal rental while determining the allowable deduction? So when we look into it, then we see, okay, so generally we talked about income. How do I record my income? How do I take into account of my loan expenses? How do I take into account of my other expenses relating to my property? So we thought, okay, we shall take the opportunity to very quickly update everybody about property-related taxes, okay, when it comes to income taxes especially. Now, question number 1, I think I will answer it here. You can just actually declare your income that can be proof that is only received by one person, okay, to be under his or her name alone as an income. Now, ladies and gentlemen, because it is a joint expenses, it is a joint property. So I believe the loans is also joint. Okay, everything is joint. So when come to expenditure, ladies and gentlemen, when come to expenditure relating to the joint name property, the claiming can only be done 50%. Okay, so hence the rental income is declared by that single person 100%, but the expenditure is only 50%. Yeah, so you have to decide whether do you want to have that kind of scenario or not. Yeah, there may not be savings by doing so. Okay, there may not be saving by doing so. So you will have expenditure that will be no income generating, because that other person have not actually have any income generated. Okay, will actually become a permanent loss. Okay. Now, on the determining taxable rental income, we wanted to just let everybody know property. Property is, I would say, one of the highest tax transactions. Okay, 2024 may be a bit different because Malaysia is going to introduce unlisted company capital gain tax, shares capital gain tax, right? Okay, capital gain tax is going to come in, so that will be another topic to talk about. But for the time being, property is the one that basically tax in 3 stages. When the property are being acquired, as a buyer, you already pay a tax called stamp duty. That is a transactional tax. Whatever the transactions that you are actually paying, consideration that you are buying the property for, that itself is an application of a tax percentage already. So stamp duty is a tax. So there's a first level of tax of a property that is actually contributed by the buyer that actually gone to the government. Okay, you see, when there is a buyer, of course there is a seller, right? So the disposal, which is number 3, so when the property was actually being sold, okay, then the seller will actually have to pay real property gain tax. So ladies and gentlemen, single property transaction, there is a buyer and seller, all right? Buyer will pay his stamp duty, seller will pay the gains on this particular disposal, okay? So one transaction, 2 different tax actually happening. Now, if this is talking about one single person, so when I buy property, I will actually have stamp duty that I need to actually pay. Number 2, I will actually, when the property is in my hand, then I become now a landlord. I become now a landlord. So then I will be doing my rental stage, and then income tax become a tax that I need to satisfy. When I dispose of property, okay, I will then have to have real property gain tax waiting for me there. So property life cycle, when it comes to tax, these are the 3 very important things. Today, we only talk about income tax. We only talk about the real, the income tax on the rental stage only. I would like to take the opportunity to introduce this thing called Section 27.1. Okay, 27.1, we talked about this statement. Rental income is assessed on receipt basis. Okay, but it will be treated as gross income, okay, for the period when it first becomes receivable. So meaning to say, ladies and gentlemen, it is a larger of how much is the 12 months rental that I'm supposed to receive, or the amount of rental that I receive, whichever is higher. Okay, so 27.3 talked about rental received in advance are accessible in the year of the year I received the money, notwithstanding that the advance rental may subject to refund if the tenancy was actually being prematurely terminated. Okay, depending on the tenancy agreement's terms and conditions. Now, let's look into this particular statement, where expenses of gross income received in advance, take note of this, where gross income received in advance is accessible when it is received, the expenditure in relation to that rental income incurred and subsequently is actually not deductible, as they are not yet incurred in the production of income. Therefore, amendment has to be done on that kind of procedure year on year. We are giving you an example to make you understand. For example, Kelvin Ong has a double-story terrace house whereby there is this tenancy that was actually being signed, okay, 16 to 18. Rental for 3 years, amounting to 36,000, okay, 12,000 meaning 1,000 a month, 36,000 for 3 years, okay, is received in the year 2016 itself. All right, how will people pay advance rental, ladies and gentlemen? When an advance comes with a discount, right? Meaning you pay me upfront, I will give you X amount of discount on the tenancy agreement rental that is actually stated. Then under that circumstances, a rental may actually be paid in advance. So in this case, I have a tenancy that is actually lasts for 3 years. I will have an expenditure that is 4,000, 5,000, and 3,000 in 3 years. Okay. However, the entire rental income was actually received in the year 2016 itself. Do you know how does the tax computation look like, ladies and gentlemen? The tax computation will look like this in the year 16 itself. So the tax will need to be applied on the total rental receipt on that year, even though the rental income may be belonging to the year subsequent. Yeah. So this is the first thing that you have to do. The tax will need to be paid right away. Okay. Now, what happened in the year 2017? There are additional expenditure being incurred on the rental. Then you are allowable to do a revision on your tax code for YA16. Yeah, you are only revising 16, you are not revising anywhere else. So the expenses incurred for 17 is then supposed to be come in. So a reductions in the tax previously paid in 16 would need to be happen, and then a reduced assessment by the Inland Revenue will need to be appealed and asked for refund. Okay, now it's not end yet. In the year 18, okay, I have additional expenditure that was actually incurred relating to this 36,000 rental income that I actually already collected upfront in 16. So I have to go back to the YA16 tax code once again and to do another revision to bring the taxable income of that rental down to its correct amount by having 3 years of expenditure in the picture, ladies and gentlemen. So when you as a property owner, right, or an agent, right, negotiating for your clients or for yourself, okay, a rental advance payment, you need to take note of this tax treatment. Okay, so it is not like, oh, I can defer taxing my income. I'm so sorry. When it comes to rental income, there is no deferment. It taxes it right away. Okay, it takes it right away. So it was actually go through a revision approach to actually do the adjustment to bring it down to its rightful 24,000. taxable income, but over 3 years and require 2 sets of revised tax combinations submitted in, and I can tell you tax agent is going to charge fee for it. Okay, ladies and gentlemen, pay note of that. So income recognitions, right? So today I want to share with you something a little bit different, instead of things that you probably can hear it throughout. Now, there are questions that ask about, hey, allowable expenses. How do I calculate my expenditure? Now, allowable expenditure, general principle, we talk about whether this expenditure is really relating to your rental or not. That's one. Okay. And then another one is we talked about under 4D source, we talked about the direct expenditure. Now, ladies and gentlemen, recently we have a case. Okay. Allow me to take the opportunity to share this with everyone. So our client case is, for those of you who may follow us, I have maybe shared in my Coffee on Zoom before as well. One of my clients, he's very active property investors. So in the company, he really have quite a lot of properties, and his property source, I cut the case short as possible, is actually, in our view, his rental income is actually what we call a business source, because he has active in providing services to his tenant. It's very different for 95% of us, okay, whereby our tenants are there, going in, lock the door, you don't see them until the tenancy, or they don't pay the rental, okay, until the tenancy end, or they don't pay the rental, okay. So their taxes was actually very high. Their number of property was actually quite a lot as well, and they have a lot of things inside. So they are calling under the 4A source. So the way we claim is actually different. But the Inland Revenue did a tax audit on the case. So at the end of the day, after much appeal, they actually turned to a 4D source. Now, what is 4D source? 4D source means your rental income is not an active business activity. Yeah? Your rental income is not an active business activity. Your rental income is just a rental income. You are just an investor collecting rental. So you are under 4D source. For today's purposes, I will not touch on that other part of the property taxes. I will only touch on this particular one.